Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Over the last few days, the Australian dollar has remained negative and also pressuring the downside. But now, from the recent rebound of 72 cents, it gives us a combination of oversold technical implications, a slight weaker US dollar, and also the Australian unemployment rate, which has helped post a bullish reversal or a hammer. It is viewed that from this pattern, further upside potential could lead us towards 73.15.25 and out of this oversold region. Now, if some of you may not know what a hammer is, it's in Japanese candlesticks. A hammer formed when an asset, or Australian dollar for instance, moves significantly lower after the open, but rallies to close well above the intraday low. The resulting candlestick looks somewhat like a square lollipop with a long stick, and if this candlestick forms during an advance on a bull run, so that's the reversal, so not from the downside but the upside, it's not a hammer, it's called a hanging man. But from this pattern, as I say, it looks for a further test up. Now today we do have the Australian Reserve Bank Governor Philip Lowe to deliver a speech. No doubt the market will keep to a bias that the RBA is still on hold. Now, yesterday, the Australian jobs report missed expectations in July. According to the data from the Australian Bureau of Statistics, or the ABS, total employment declined by 3,900 in seasonally adjusted terms, against a forecast rise of 15,000, although all losses were part-time positions, and June already strong read was upward revised, and the unemployment rate eased to 5.5-year low of 5.3%. Forecast was previous was 5.4. Over the 12 months, 3,000 jobs have been added to the Australian economy. So this is helping, and no doubt see Philip Lowe probably deliver more of a upbeat in terms of talking about the economy. As I mentioned, towards 73.15.25 should offer a sell zone. I do believe that the market will look back eventually to the downside of 72.15 or towards that 71.75.85 support. A slightly weaker US dollar overnight, and you can see the pattern looks somewhat similar to the Aussie, since rebounding in front of that level of 112.85 is the market is looking back towards the 114 region. Therefore, we could see a possible challenge towards the area of 113.75, which is pretty much on it now, and towards 114.20.35 to 114.70.85. Towards or above 114.20, I expect to see selling opportunity and see a rejection from there and look back to the downside. Now, under 112.85, I see no support until 111.40.55. Well, it would seem that the bulls have returned for dollar yen, and in this case still look towards a region of 111.15. A break above there would give further scope to the upside. Do note that dips can fall as low as 110.15.20. So to look to buy this area, I would still give us a little bit of room. But looking to the upside, and with this MACD also forming along with the other side, possibly breaking above the midway point, could give us further momentum up to a 111.60.70 as a target. The pound is weaker overnight, and not like the other markets, it's still showing potential to challenge the 126 region. Later, the Brexit talks are back on the table, and the focus for the pound will probably keep in negative territory, due to the fact that the UK Foreign Secretary Jeremy Hunt warned recently that a no-deal Brexit is becoming more likely, while the EU Deputy Negotiator Sabine Weyand recently tweeted that business needs to be prepared for a disorderly Brexit. If that's the case, then we are looking lower, down towards the region of 125.55 or 124.45.50 70 area if we take this 126.60 support out. A long-legged doji posted on gold and now challenging the area of the overnight high, should I say, of 1,180.81. I do believe the market has found a base and could show further potential to the upside. And if that's the case, then I'm looking up towards 81, 87, and maybe towards the 1996 region. Support on the day is seen at 68 to 70, but a base is also holding at this stage at 1160. Rounding off with oil, the market has shown a little bit of momentum over the last 24 hours since crushing through that 66 trigger bearish level. Any advantage should find with supply coming back into the market around 66.5. I do expect to see the market hold to the downside objective, which at this stage is at $62 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day and a great start to the new weekend.